All right, hello and welcome, folks. Good evening. It is Thursday, January 30th, 2025. We are having a great week so far, a great month to start the year. I'm going to go through my portfolio a little bit with you today, or at least tell you how things are going. So I want to share if we haven't shared that in a while. We're going to cover the main trading portfolio. We're going to cover the longer term investment portfolio. We're going to cover the small account that we trade. But really, I'm going to focus today on the income poor man covered call trade that we've been doing for, I don't know, 15 years or something like that, 10 years. But we put a couple more on today, and I get so many questions because people really struggle with it out there. I do two types of poor man covered calls. Okay, let's just talk about it real quick. Okay. It's a great trade because I love selling, naked puts and leaps. I like buying leaps on high quality only names. And I only have 12 names I'll even trade. Okay, so I like high quality names, okay, because I don't need craziness going on. There's enough of that to begin with. But I want stuff that's got a long-term uptrend that's going higher. So I do like higher quality names. We are going to put on a trade today. I'm going to show you my Tesla trade and my NVDA trade that I put on today. But two types of permanent covered calls, getting back to that. One that we do in the long-term account, the lazy trader, as we call it, or the investment account, those were looking for that price appreciation because that account is long-term, slow, steady, upward growth, quality names, and mostly SPY, QQQ, names like that, high quality ETFs and indexes, right? Well, we want the growth. We want to see long-term price appreciation, but we will sell farther out of the money covered calls just to generate some additional income while we allow that stock to keep moving up, right? But we don't want to get called away. We don't want to get into a spot where we have trouble. That's because we want the long-term appreciation. We don't want to cap our upside. Okay. We just want to let this account keep growing, 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 growing over time. And unlike the market that grows 10, 11% a year, most years on average, okay, the last 2 years, 20 plus percent, but 10, 11% a year. This account grows more because we're using leverage. We're using options. We're not just owning SPY. We're owning leaps on SPY, which generates a lot more gains for us because we're using leveraged options. Okay, there's also a little danger in there as well, but I feel pretty good because they're high quality names and indexes. And then sometimes the covered calls can lend a little bit of support. And then I also love selling naked puts in that account. Let's forget about all of that. That's your traditional poor man's covered call. You buy the call 6 to 12 months away or more, and then you sell an out of the money call against that trade. You pay a lot less for the leap. Okay, so you get a great return on your money. That's all well and good. Great strategy. I use it all the time. Okay, but what I want to talk to you about is the income covered call. This is totally different. I've been talking about it for a couple of years now, and I've shared a couple trades more recently on it. I stick away from most stocks, don't like most stocks. There's only 12 I'll even look at. And for the most part, I don't even have hardly any of those in my account for trading because I hate most stocks. Okay, because you just never know. Like the NVIDIA news, out of the blue, boom, whack, 15 points down. No fault of NVIDIA, just news kills you. Right? So I like staying away from stocks. I like those indexes. That being said, there are some high quality names like NVIDIA and Tesla and Google and Meta and companies like that that are out there. So the income poor man's cover call is the same premise, okay, except in our trading account, I really don't care about the appreciation. That's not my goal. I have an investment account, okay, and we have a lot of money in investment accounts. It keeps this growing every year. That's great, okay. I'm trying to trade and generate cash flow. So the goal is cash flow daily, weekly, whatever it might take to do. And the trading account, it's where we're trading 112 trades. That's where we're trading strangles. These are trades meant to come off in 30, 60 days, something like that. Okay, not holding them for a year or two, looking for a price appreciation. It's a trade. Okay, I want to get it on. I want to get it off. I want to make my 3% a month on average or more, and we want to generate cash flow. So the poor man's cover call fits in here as well. And essentially what that is, it's the same basic structure for the underlying on here. And let's, I'll share my trade plan with you. So you can see my trade plan. And again, this is the income poor man's covered call. I'm looking for a chart. I do prefer an uptrend on the weekly if we can get it, but it's not really necessary because I really don't care about the underlying so much. I don't want something that's, crashing, okay, but and drifting down over time after time. But if it's quite quality names, it goes up typically. So we want a weekly chart, something that's moving up. I'd love to see the RSI under 55 or even under 50, to be honest with you. I probably should even change that in the plan that even under 50 would be better, and maybe something that's even reversing or bouncing off of some oversold areas, or if it's oversold, great. Okay, quality stocks that are oversold, bottom of the Bollinger Band type things, these are great. Maybe even a pullback to the 50 EMA, something like that. I don't even know that I should put the 21 in here, to be honest with you. Okay, because I'm okay with these pullbacks that are even bigger. Okay, bouncing off oversold areas, ideal, and then maybe lower Bollinger Bands. Okay. These are in my head. I don't always put them on paper, but I figure we'll get them on paper for you. High quality stocks, I already talked about it. 180, 365 days, already covered that. I'm buying the long call, somewhere between the 70, 90 delta. 80 is probably my sweet spot, but I will go 85. I will go 90. I don't typically go 70 as much, but it depends on where I might be okay getting assigned as well. Not that I would convert these into stock, but I could. Okay. And I'm sizing them appropriately that I could technically do that if needed. Uh, so would I be okay with that there? Maybe. And then I'm selling an at the money, uh, selling the at the money delta call. So the at the money calls, I don't even know if the word delta here is good. At the money calls around 7 DTE. I don't mind doing weekly. I don't love doing monthly on these. Stocks, like these can move pretty substantially. So I'd like to generate the weekly cash flow. And technically, weekly cash flow compounds at a better rate than selling the monthly. Anyway, so we can be a little bit in the money. We can be a little bit out of the money. It really doesn't matter. We're not doing like these 30, 20, 15 delta way out of the money things. No, we're like 40, 50 delta, something like that. We could be at 60 delta, 70 delta, depending on what the stock is doing. So we could also go in the money if it's a stock that maybe it's trending down a bit. I don't mind going in the money. It protects my downside and generates more cash, which is fine. And all I'm really looking for is the extrinsic value for it. So we'll close the call when the extrinsic value gets to about 80, 90%. So we want to capture most of the extrinsic value out of the stock, whether that covered calls at a loss, okay, or not. Okay. I want the extrinsic value. If the covered call is at a loss, that means the underlying leaps are at a big gain because I'm at 80, 90 delta. So they've also gone up the same amount. Okay. So if we breach the covered call, fine. All I care about is the extrinsic value on these. That's why it's a little different trade. It's just an income trade, right? And that's pretty much it. So if we're in the money at expiration, we got to close it. We don't want to be assigned. But if there's any extrinsic value in there, typically we don't get assigned early, typically. If we do, there's ways to unwind and get out of that. We could close the trade if we get assigned, depending on how much of a loss that may be. We could just simply buy back the short shares, okay, or buy long shares to offset that. We could also close the leaps or take assignment of the leaps and just use those to offset those losses. Okay? But typically, it doesn't happen. We're typically you won't get assigned covered calls A until after hours, and B if there's very little extrinsic left. People aren't really paying unless they're stupid uh, for a lot of extrinsic value on a call. And then we also might note that if you're in the money near expiration, we do have that assignment risk. You may want to consider taking it off, but only if the extrinsic has really gotten low. I will also consider closing the long trade, the leaps, if the loss on the leaps minus all the gains on the covered calls takes me down about 30%. Okay, which means the loss on the leaps has to be probably 40% or more because I'm offsetting it with what I've made on the covered calls. If I'm down maybe 30% in the overall position at any given time, it might be time to take it off. We'll see. It depends. It's rare that happens. And then sometimes you can take the covered calls off early. If we get to like 50% of profit in half the time, in 3 days, I might just take it off and write another covered call for that same expiration. So if we put something on Friday, and by Wednesday or Tuesday, it's already at 50%. Maybe take it off and put another one on for that same Friday. All right. So there you go. Don't mind in the monies. It doesn't bother me. All of that stuff is good. So let's look at two examples and then we'll talk about our portfolio as well. So let's get into our two examples today. The first example is going to be NVIDIA. So if we're looking at NVIDIA, is NVIDIA on the weekly chart here? Is this thing in an uptrend? Yeah, in a nice uptrend, comes down every now and then, bounces off this support, okay, rallies up, comes back down, and then we just this week hit this support. Now, technically, we broke it and then rallied back up, okay. We're also really close to the 50-day moving average. So we're in an uptrend, okay, which is still fine, okay. Overall uptrend, pulling back to the Bollinger Band, pulling back to the 50-day moving average here, bounced off of that, pulling back to the support line. This is a good spot to be in. RSI is below 50. I'm okay with it. Okay, looking over here, yep, we've had a nice gap down. We have a gap to fill up here. Every time this thing tries to sell off the last 3 days, buyers keep buying it back up. Okay, I don't mind this stock in here. It's okay because this is an income generating, and NVIDIA is not going away. Okay, so you guys can all take your NVIDIA bearish scenarios that this is going to zero, and you can stick them because NVIDIA is going to be there. Demand is going to be there. We got earnings coming up next month. Trust me, NVIDIA is going to be just fine. Okay, a few less chips is rumored. Maybe, but if they have to drop their prices, more people are going to want them, and that means they're going to sell more chips. Okay, so either way, NVIDIA's fine. So I'm not going to shed a tear for them. I think they're going to be in great shape. The other trade is going to be on Tesla. Looking at Tesla here. Are we in an uptrend? Yeah, we're in a stupidly high uptrend anyway, but we have sold off from our almost $500 high, 486, all the way back down to about 400 here. And I happen to put on the fib extensions on the weekly chart here. It's not showing on the daily, but and we pulled back right to the 38.2 fib, and we've been holding that nicely for a couple weeks now, and pretty good reversal day to day. So Tesla up, okay, nice move to the upside here. You're starting to see things starting to move back up, but uptrend. Okay, moving down to the 21 on the weekly, not even there yet, so it's still in a good uptrend. Losing some momentum. I wish RSI was a little lower, but I'm going to jump in here because earnings are now over, and that's not hanging over us. We already know what earnings are, and there was a bit of an earnings miss, and this thing is still good. I like Tesla. Earnings are out of the way. It's not to me just a car company. Optimus Robot, Robotaxi. I'm excited for all of those things. And this thing's performing well after missing earnings. So guidance still looks decent. So there's our two for today. Let's go and see what we did on these two. So let's get into the trading account. Again, hopefully this makes sense for you. And we're having a good year right now in our accounts. We're up about $75,000 on the year in a month. So that's not too shabby. Doing pretty well on our accounts here. But this is the Income Navigator account. So it's the only one I want to focus on right now. Having a good day today as well. We're now in the after hours markets for the futures. So numbers are starting to switch around because these are all the futures are now up or down, in the after hours sessions. So this is what we're seeing. Anyway, let's go and let's take a look first at NVIDIA here. What did we do on NVIDIA? Well, I already showed you the charts that were everything aligned. So what we did was we went out 197 days. I didn't go out the full 360 because I didn't love the juice that I was having to pay, the premium that I was having to pay way out there. Didn't love that. Okay, it was a little expensive. 197 seemed pretty good there. I wanted to get down to around the 70, and I couldn't get to the 70 because the extrinsic premium at a year out, I thought was a little expensive. So I shortened it up to about 197 here. Either way, like I said, 6 months to a year, it doesn't really matter. You go 2 years, do whatever you want. Okay, bought those for $53.70. So overall, this thing cost us about 53.70 cash secured. Okay. On a margin, obviously, this thing cost us a lot less money. So if I'm looking at the actual margin that was used, but I'm going to just talk about the cash secured value of this um, NVIDIA trade right now, which was 53.70. However, it only used $1,700 in margin. So very good margin trade, but I'm not going to give you the returns on margin, even though that's technically the returns we'll be looking for. So we bought the 70. Okay. Let's look at the trade. Let's look at these trade charts here. All right. And we're going to go out here. We went out to August. We went all the way down to 70, which is around the 90 delta. Yeah, earnings are coming up. I still feel pretty good about earnings, but either way, I don't care because this is not an appreciation story. This is a cash flow machine. Right. So we bought the 70, close to 91 here. We've actually already made $400 on this trade today. Well, $200 on the overall trade, $400 on this leap already today. So, which was nice. And then we sold next Friday's covered call pretty close to at the money. Okay. Let's go and let's take a look at that one. We're not going to sell these over earnings, so we'll keep them short of earnings here. But we actually sold the 123, which has already now gone in the money. Oh, it's in the money. Oh no. Okay. Everybody's going to panic about that. Okay. Yeah, we're down now. So we opened this today, but look, net on this trade is $203 today. If we decided to close it today, I would have made 4% today. Okay. I'd have made $203 today. I'd made 405 on the leap minus the 202 loss, but we still have, a boatload of extrinsic value. Okay, we sold this thing for 360. Right, all right. So we sold the 123 at 360, and this was when NVIDIA was down this morning, and it rallied towards the close. Okay, we still have 371 of extrinsic. We still have a lot of money left to come out of this trade. Another $300 by next Friday, no matter what the underlying does. If it keeps going up, if we go to 130, okay, these leaps, okay, are going to go up another $600. We're going to be up $1,000 on these leaps, okay, or more at 130. This thing is going to be $7 in the money, okay, which means I'm going to lose at expiration. I'm going to lose 700 because I'm going to be $7 in the money. Okay, 1,000 minus 700 is $300. Well, $300 on that $1,700 is a 20% return. Okay, beautiful. Let's go and do it again. Okay, so I don't mind taking losses on the covered calls as long as I'm getting the extrinsic premium out of the trade. All right, so there's NVIDIA. It's just a trade. Okay, and if we lose, we lose on the covered call. It's okay because the underlying will go up or down in accordance. So it really doesn't matter. I just want to generate cash flow. Okay. This whole account is about trading and generating cash flow. I do 0 DTE trades here. I'm generating cash flow. Okay. I'm doing poor man's covered calls here. I'm generating cash flow. I'm selling puts. I'm selling leaps. Okay. I'm selling 112s. I'm selling strangles. It's all meant to be selling premium and generating cash flow. That's all I'm about. Okay. I don't care about the leap in this and the capital appreciation because I am a premium seller and all I care about is cash flow. Right. And then Tesla, we did something similar on Tesla today. So I know I have an extra trade in here as well. So I did buy calls. I know I'm a premium seller and I bought a call. I'm sorry. I couldn't resist the trade on Tesla today. So I knocked out, just a long call. Anyway, let's ignore that. Okay, you didn't see that. Let's move on. All right, this one I did go out a year. So on Tesla, I did go out a year here, and we bought the 200s. Okay, it cost us 218. Well, what did it cost us? It cost us $210 at the time. This thing's already up $670 today. We already made $670 on the leap itself on Tesla. So again, I kind of knew what I was doing on market timing when I got in. Yeah, I'm ahead of the game, but I'm still losing then on some covered calls because this thing has moved up, right? But we bought the 200s They were at 210, now they're around 218. Okay, but at 210, that would put us at about four at you know $200 plus the 210 premium that we paid. Okay, which is all time value. Okay, there's no um, nothing else in it, but mostly time value here. Well, I shouldn't say mostly, but we have a lot of that in here. Um, I shouldn't say it's all-time value. It's partially intrinsic, okay, because we bought the 200 and we were sitting at we're sitting at 400 right now. So 200 of that is intrinsic. The extrinsic is $10. So I want to make sure I'm covering that right for you. Okay. I've only got $10 in premium that I have to pay off at some point in time. Okay. I sold a covered call today for $11.55. If this trade is done, okay, as of today, I've already paid off all of my extrinsic premium for my leaps, and now I have essentially a one-for-one style trade on Tesla. But we're going to keep doing more. All right, so we sold an 8-day trade out there for $11.55, which is $1,150 on this trade. It's now we've moved up a bit on Tesla. In fact, I bought this when Tesla was only up $4 and it ended up being $11 up for the day. So we're up $7 ahead of where we were, but we're sitting right now smack dab at the money. It is a loss. Okay, I'm losing $282, but I've already made 670 on the leap. Okay, so net of those two is about $418. Okay, so we've made, it's at $418. Yeah, pretty close to 400, $412, something like $400. So anyway, we've made $400 on this trade already. Right now, we're maybe just a little bit less, about 390 now. I'm sorry about that. But we made $390 today alone, 390. And the Tesla, okay, not only did I spend, well, $21,000 to do that, but margin-wise, it only cost me 12. Okay, so I'm technically up $400 close to it on $12,000 in margin. I'm up 3%. I've already got my month in because that's my goal of the month, and it's only been a couple hours. Anyway, these are our two trades for the day. We do these periodically. I also do this on IBIT. I've shared this trade, so this is nothing new. So we do these as well. This trade, we've already moved a couple of these around on this. Well, this is the first one in this account. So we have IBIT that we put on. This thing's up 7% now in 2 days, 3 days in trade, in the trade. So we bought the 350 a year out. We went out to the 40s. We bought that one, okay, and then we sold the 59. And right now we are right at the money. We're actually technically in the money on the covered call. Okay, so the covered call has generated no income, but we've already made 316 on the underlying. I want to add more to the IBIT trade. I'm a big fan of Bitcoin, but I just think right now this is a great opportunity there to make some money. So anyway, that's the Parman covered call income version, right? We've been doing this for a long time. I'm just doing it in this account. It is not an appreciation story. Don't care about the appreciation. I'm just trying to generate some cash flow up or down in the market. Doesn't really matter. It's just a trade that we do. A little bit of our account is into this, not a big portion. I'm not trading massive amounts. It's just a trade, okay, to help our spec trades out a bit. You can also see that we've got trades that are working pretty well right now. We are in the money on our ATM 11X trades. So we do an at the money version. These are really going well. We're up 130% in 8 days on this trade. Okay. But I'm looking for more. So I haven't closed it yet. I want more. I want more like 200-300% potentially. Taking a look at this 112 trade, this is up 74. We've got naked calls in here. We just have naked calls on here. These things are up almost 60% now. We've got a strangle running. This thing's up 23% there. ES, plenty of different trades. We got a Jade Lizard up 50%. We got another At the Money 111 up 124% in 31 days. Loving that. We've got the naked puts of our 112 calendar trades up 70 plus percent. Those are in good shape. We've got another 111 At the Money that's up 40%. Another naked put, it's up 40% here. That's pretty much it on those. Some different hedges and things in there. Gold sitting on a Jade Lizard up 40%. NASDAQ, another At the Money 111 right now. So I just felt that the market is a little overdone, a little cautious. So that's why the At the Money versus the standard 112 or 111 bear trap type trades. But it's up 20% in 2 days. That's not too shabby. Bonds, got a Jade Lizard in bonds up 75%. Got a Strangle in bonds up 44%. Got another Strangle in bonds that's newer. It's only 8 days, up 2%. So we're in pretty good shape overall, like where we are on these trades. And then we do have our SPY Leap campaigns. We're getting close to starting to take these off. Another trade that I love, okay, probably my favorite trade of all of them is the SPY Leap trade. I think that is a no-brainer type of trade. If you have this right size account, portfolio margin is important. The SPY Leap trade's a great income generator as well. They come off on average about every 42 days. That thing is just generating money, and you've got a great solid underlying in SPY. All right, hope this was helpful for you. And you got something out of it, but that's how I'm trading the income PMCC trade. Now you get a sense of how I'm putting it on. Something else, if you like it, great. Give me a thumbs up down below in the comments here. You can leave comments as well, but give me a thumbs up. Give me a like here if you found some value in this. If you're not a subscriber, subscribe to the YouTube channel, and you want to watch how we're putting these on, how we're selecting trades, how we're managing our trades. Come and join us in the Income Navigator Discord service. And the last thing I'm going to do here is let's just update the trade tracker because I didn't have a chance to do that today for today's numbers. And I don't know what these are. So I don't like to sit here and stare at a screen all day. So I really don't even know what my numbers look like. But let's see. We ended the day with a delta of 494. Okay, 0.13, totally fine. I like being fairly delta neutral. 799 on our theta. Our net lick, 392,038. So nice net lick. That is now another new high in here. So another new high. We are now up 6.4% for the year. And our buying power here is sitting at about 49%. But pretty nice, 6.43% while the market's up 3%. So we're right now doubling the market. I don't expect that to last all year, but certainly would be awesome if that was the case. Here's the Lazy Trader, our income account that we share. And let's add this one as well. Take a quick look. This thing is 875. And this is very directional portfolio. So we're 875, still not bad. I mean, still a 0.24 delta, which is not bad. And then our theta is 870. Oops, not where I wanted to type that. Theta 870, got some theta going. This thing's at 376,934. Again, this thing has larger swings because it's got a lot of long-term holdings in it that can swing with the market. This thing, though, that's also at a year-to-date high. So we just set a new all-time high in this account. Let's see, 241, 267. Okay, we're sitting at about a 58%. I do go a little higher on my BP usage in this account because I'm not trading futures. I'm just trading stocks, ETFs, but just high-quality stuff and indexes. So there we go. Another new all-time high. I'm excited for that. And then in the smaller account, okay, this thing has had a little bit of a struggle because of NVIDIA, and we are doing some NVIDIA trades in this account. So it's up, it's down a little bit more. Let's see, 45 for Delta, 54. The net lick is 19,142. Okay, again, this thing's just kind of bouncing around because there's a decent chunk of NVIDIA in here that we're writing covered calls on. but I'm okay with that. 89.40. Okay, so this is where this account is right now overall. All right, anyway, there you go. You got a chance to see what the accounts look like. I think we're doing great. New all-time highs in Lazy Trader, new highs for the year in the trading account. There you guys go. Have a great evening. We'll see you guys later. Bye-bye.